2010, then 2018, which didn't come on by 2019, started in 2019. Whether those reasons are still valid, relevant in our case. We will also look at the socio-economic issues associated with the close season. For the information of your viewers and listeners, the Scientific and Technical Working Group suggested July, August, September as the biological period. Coincidentally, July, August, September is the economic period for us as fishers. That is why we used to hear of bumper season. This bumper season of fishers falls within this biological period that the scientists have suggested. For which reason the close season will be observed within July, August, September. So what measures have we put in place to mitigate the stress, the consequences that artisanal fishers will have to endure because they will have to observe the close season within the economic period of the fishing? So these are socio-economic issues. Again, issue about widespread IEU, because IEU actually erodes all the gains of close season. We are closing the season so that the fish will spawn, we will recover our fishery as was cited this morning. The question is, why are we not stopping the harvesting of juvenile fish in huge volumes by industrial vessels and by canoes and as well? So juvenile fish is being harvested huge volumes across all sectors. So we close the season for the fish to spawn, but the very juvenile fish are harvested immediately after the close season. So how are we addressing IEU comprehensively so that whatever gains we make in the close season can be a lasting gain instead of just observing, but then IEU coming in to erode all the gains? We want to, I must use this your platform to thank the Honorable Minister, Honorable Howard Kumsin, for giving us some information about the close season we did in 2021. We observed it in July. 8 months down the line, we are hearing something from the report for the first time. How do we build confidence in the system when fishers do not get access to the reports so that we can really appreciate the gains that we have made over the years? In 2019 close season, we have not heard anything about it. In 2021, luckily for us, the minister has issued a statement this morning, so we have heard something about it. It should be possible for fishers to have unimpeded access to the report so that it builds confidence in the system and fishers can play their respective role to support the implementation of the close season. It is true that the close season in the artisanal sector has come to stay as a management measure. It is the responsibility of all stakeholders to contribute to making its implementation effective so that we can be sure of making gains, rebuilding our fisheries, and developing artisanal fisheries. So some of these issues will be discussed on Wednesday when we put the implementation of the into perspective, and hopefully it will help its implementation and the benefit of all of us.
Sure. Nana, before you go, the issue of illegal and unregulated fishing has been a thorn in the flesh for many fishers and the ministry itself. So can you tell us what progress has been made so far in reducing this canker?
Thank you. If you remember, before the 2021 close season, the Honorable Minister was very keen on this and made the no IEU pronouncement. We as resource users, out of experiences, asked for a comprehensive plan because it has not been easy for us to address. And IEU has become more widespread even than before. If you have been following, even launched a campaign against the use of explosives and obnoxious chemicals in fishing, which is ongoing from 1st March to 31st May. We are engaging every fishing community to get the fishers to put a stop to the use of chemicals and explosives in fishing. So we actually need a comprehensive plan. Let me add this. The Honorable Minister did well to bring the illegal transshipment, the psycho thing that was being landed in some fishing communities, to an end. Only for the harvesting of the small pelagic and the juvenile fish to be more packaged this time round, because these fish are put in cartons and they are landed at the port under the supervision of the state. They are put to the cold stores, vans pick them, and the community. So we clearly need a comprehensive plan, and that is what we have been calling for. That as stakeholders, it is important for us to take time, sit down, deliberate, come up with a comprehensive plan over a period which focuses on not only enforcement, but compliance and deterrence, so that resource users, fishers, canoe owners in particular, can also play a role to bring an end to the illegality, because it is having a toll on all of us, on the business, on the fishing communities, and the standard of living of the people. So yes, we have been talking about it. The next thing is to have a comprehensive plan. We have, for instance, started the campaign against the chemicals and explosives. In June, we are beginning something on light fishing, because the law frowns upon all this, and we are working hard to bring an end to this.
Right.
But we are calling for a comprehensive plan that will allow stakeholders to play their respective roles, follow thoroughly over a period, so that we can make gains and actually track the gains that we make in our fight against IUU fishing.
Good. Well, thank you very much. Nana Kwejan is the president of the Canoe and Fishing Gear Owners Association of Ghana. On breakfast today, the director of plantation at Ghana Forestry Commission, Mr. Hughes Brown, said the commission is working to address the challenge of poachers attacking the commission staff in the forest areas to avoid arrest.
Oh yeah. And in the past, I mean, if you follow the news, we've had a few of our staff killed, and subsequently we've had to take them, many of them, through military training to toughen them up and make them combat ready. Forest guards are attacked. Sometimes you go in to arrest some illegal operations going on there, and then communities around and attack our officers. You usually have these cattle being brought right up north to the south, because there's more lush vegetation for them to feed on. And this time, if you go to Bono, about 5 out of their 7 reserves, you have thousands of cattle that have invaded.
Wow.
These Fulanis or herdsmen have set up camps within these reserves, and as they go through, they destroy vegetation. The cattle herdsmen actually set fire to the vegetation, the dry vegetation, to manage it like a rangeland, so that they can get fresh grass coming out with the first rain. So we're asking for more forces on the ground to help us solve this.
We'll be right back with more news. Please don't go away.
It's a nightmare dealing with the filth in Accra.
Business, and my name is Esther Edu Ohumewu. To help tame the overshot of the dollar to the cedi on the forex market, the Bank of Ghana has adjusted the policy rate by upping it by 250 basis points. This means from now on, lending to commercial banks is pegged at 17%.
T has decided to increase the policy rate by 250 basis points to 17%. In addition to the upward policy rate adjustment, the Bank of Ghana will, effective 1st April 2022, enforce the following measures in relation to the universal banks. The cash reserve ratio is increased to 12%. The capital conservation buffer is reset to the pre-pandemic level of 3%, making the capital adequacy ratio a total of 13%. And the provisioning rate for loans in the other loans exceptionally mentioned category is reset to the pre-pandemic level of 10%.
Still on that, the governor also announced measures to deal with the cedi.
cedi came under pressure sometime in February, and the reasons for that have varied. Part of it reflects the fact that we had lost access to capital markets, and therefore we were not going to be able to issue a bond this year, which has immediate implications for the availability of foreign exchange. But as you said a few moments ago, our friend from Ghana Television, the government has announced its intention to raise $2 billion from some syndicated arrangements with banks. Now, if that goes through, that should help improve the supply of foreign exchange to the economy as a whole, and therefore should impact positively on the strength of the cedi. In terms of what the Bank of Ghana has been doing, as you're aware, we have the fortnightly foreign exchange auctions where we make foreign exchange available to the system. And in the last few weeks, past 4 weeks, we have been making a special allocation to the OMCs and the energy companies, as well as the cement producing companies. I can tell you that as of last week, we had completely cleared the pipeline demand for foreign exchange from these OMCs. So what you are saying in terms of tweaking the framework for the OMCs is already in place. And I think that if you talk to the OMCs, they'll tell you that the Bank of Ghana has been making foreign exchange available to them. In addition to that, we've made foreign exchange available to the market broadly. And we think all of that should help in terms of mitigating the pace of depreciation.
And joining us in the studio for more on the policy rate hike is our business editor, Mr. Edward Nyako. Edward, you're welcome.
Thank you, Esther.
So, did you expect the policy rate to go this high?
Yes, in the sense that if you look at inflationary pressures, not really within Ghana, but outside Ghana, if you look at the fuel price, which has gone beyond $100 mark, and also the supply chain constraints with regards to feed supply, fertilizer, and all these things are feeding into the food basket. Essentially, inflation go up because it's for a long while. We're now talking about inflation over 15%. So it's worrying. And the best policy available, or the tools available at any disposal of any central bank, is to deploy this policy to make sure it mop up excess liquidity on the market to tame inflation. So we're expecting it that by hook or crook, the central bank will do that, because if you look at the Fed in the US, it did increase by 0.25%. The Bank of England also did the same. So all over the world, central banks are upping up interest rates so that they will mop up excess liquidity in the market to make sure that inflation is reduced to the barest minimum. though some are saying that it's going to affect credit on lending, credit to the private sector. It is obvious.
17% is quite high.
It's quite high because in a sense that if you go to the banks now, ideally, if it's not the policy rate is at 70%, what it means is that if you go to the bank, the bank should add 7% to that. So if you add 7% to 17%, we are talking about 24%. And then they add other things as well. And knowing where we are as a country, it's likely that as an individual, if you go to the bank you want to borrow, you are likely to get 26-27% as your interest rate. Though is on the high side, on the other side too, it's also good because if inflation pressures are not contained, it will it will undermine even the growth of the economy. So it is a strategy to make sure that the pressure on you as an individual, because when you go to the market, you buy a commodity is 1 cedi today, tomorrow it goes up to 2 cedis, you not find a word. Okay, so you have to, the governor or the central bank has to do this to make sure it reduces the rate at which prices are increasing, so that the individual in the system will feel a bit comfortable, so we can plan. Because once inflation pressures are too high, the headwinds are too high, you cannot plan. And once you cannot plan, it affects your ability to do business. Once your ability to do business is affected, you cannot engage more hands. Once you cannot engage more hands, it means that there will be contraction in terms of growth of the economy. And when this happens, government will not be at a position to be able to push through its policies. So these are some of the things that have been done to make sure the headwinds are contained.
We are talking about the ability to do business. 17%. Would that not prevent the private sector from going to the banks?
Yes and no. If I have a business, because at the end of the day, you are living in a system. So if it's been hiked from 14.5% to 17%, you as a business person have to contain, deploy a strategy to also make sure that you are able to factor in all these things into your profit margin or what you're going to do. But at the same time, like we said, it's going to crowd out the private sector. So what it means is that government bonds, T-bills are going to be more attractive. So people have shifted to other, securities like dollar. Now people are buying dollar to save now. But if you see that rate at which dollar is increasing, it cannot be measured or cannot be compared to what is being done in terms of T-bill rate and bonds. You are likely to move away from that and move this way. So the individual private sector person is going to be affected in terms of costs of doing business. Government is also trying to make sure that it's easy pressure on the local currency as well, to make it securities more attractive. So you think
there's a balance now?
That's what government is trying to do. And that is the only way out, actually. If you didn't look at monetary policy system, that's what's been done. And that's how we see in the Fed in the US has hiked its policy rate, lending rate to interest rate to 0.25% at 0.05%. So these are some of the things being done to make sure that inflation is reduced. Because whether we like it or not, we don't know when the invasion of Russia and Ukraine is going to stop. And secondly, supply chain disruption that has been necessitated by COVID-19 at the same time by this invasion in Russia is going to continue for a while. So automatically it feeds into inflation. And once it feeds into inflation, your pocket will be affected. So what governments have to do all over the world is to make sure that they do something to contain the inflationary pressures. And that's what's being done.
Okay, so talking about Ghana's debt to GDP ratio is currently above 80%. Did the governor mention that?
He did. That one you can't do without it. Yeah, he did. But like he stated that, one, the government has initiated moves to cut expenditure by 20%. So once this is being done, automatically by the close of maybe the second quarter, we will see the signs of these move by government. And again, also, because government announced earlier that it's not going to go to the Eurobond market, that's how come it affected confidence of investors on the market. And that's how the CD also moving downwards. And so at the moment, we've seen the CD depreciating by 14%. What also means is that you see there are people who are invested here who are taking away their profit. And so at the same time, this is the first quarter we see a lot of companies, multinationals also repatriating their profit from the country. So these are normal things that are being done. But because of the credit rating, downgrading of our ratings as a country, this has also led to, has contributed in putting pressure on the local currency. So
In just 30 seconds, what did he say about the currency, how we are going to stop the depreciation?
Well, there's an announcement by government that is going to do a syndicated loan of about $2 billion. So essentially it's about supply and demand challenge. So when the supply is in there, $2 billion come into the system, it's going to help ease the pressure on the city.
All right. Thank you, Mr. Edward Nyako. That was the business editor, Mr. Edward Nyako, speaking to us about the policy rate, which has been upped by 250 basis points. And we're still on that. Ghana's debt to GDP reached 80.1% in 2021, raising concerns over the country's debt sustainability programs. Total debt stock hit 351.8 billion cedis last year, marking an increase of 60.2 billion cedis compared with the previous year.
Of the total public debt for December 2021, the external component stood at 170 billion cedis, while the domestic debt is 181.8 billion cedis, according to the Bank of Ghana's summary of economic and financial data. While revenue has slightly moderated within the period, tax to GDP remained below 13%, far below the regional average of 20%. The governor of the Bank of Ghana, Dr. Ernest Addison, attributed the increased debt stock to current challenges facing the economy.
Provisional data on budget execution for 2021 indicated an overall broad fiscal deficit, cash, excluding financial sector cleanup costs, of 9.7% of GDP. Against the program target of 9.4% of GDP. The corresponding primary balance for the period was a deficit of 8.9 billion cedis against a deficit target of 8.7 billion. Over the year, total revenue and grants amounted to 67.9 billion Ghana cedis, below the projected 72.5 billion Ghana cedis. Total expenditure amounted to 110.4 billion Ghana cedis, below the program target of 113.8 billion Ghana cedis. These developments impacted the stock of public debt, which increased to 80.1% of GDP.
Cabinet has been meeting since Thursday to discuss the current challenges to find sustainable solutions. The government is expected to adopt austerity measures to help address the fiscal mismatch and engender confidence in the Ghanaian economy.
Ghana's trade surplus narrowed to $404.9 million in February 2022 as against $432.7 million registered during the same period in 2021. In the latest report by the Bank of Ghana, gold recorded the highest export earnings of $885.2 million in February 2022. Ghana's exports stood at $2.737 billion in February 2022, higher than the same period last year, while imports were estimated at $2.332 billion in February 2022, also higher than February 2021's estimate. The trade balance, however, stood at $9 million in January 2022, but rising crude and gold prices impacted on these figures. Gold recorded the highest export earnings of $885.2 million in February 2022. This was followed by crude oil, which registered $688.8 million of exports in February 2022, as against $510.2 million in February 2021. Cocoa exports, however, dipped to $596.8 million in February 2022. The country's overall balance of payments stood at $510.1 million at the end of December 2021, which is about 0.7% of GDP. With regards to the country's net reserves, Ghana's net reserves fell to $6.09 billion in February 2022 from $6.079 billion recorded in December 2021. This is equivalent to 4.3 months of import cover. In the latest report by the Bank of Ghana, the reserves rose marginally in January to $6.095 billion from the $6.079 billion recorded in December last year. We will now take the interbank and commodity figures for the day.
decisiveness and self-confidence. Being strong is not just